Yesterday, Growthpoint announced that it's going to acquire the entire Tiber Group portfolio of top quality offices in Sandton and nearby suburbs, and the portfolio's management business in a 6.6 billion rand transaction. We're now joined by Anton de Goede from Coronation Asset Management on the line from Cape Town. Anton, the disclosure came just a little too late for us to talk to you yesterday. In fact, it was right towards the end of this program that it came out. But 6.6 billion rand, the biggest yet for Growthpoint.
Yes, it's quite a sizable transaction. I think it's around the 10-15% of its current SA portfolio, and it is larger than the V&A transaction that they did together with the PRC 2 years ago.
And it's on its own this time, not with the PRC. So I suppose in relative terms of a 48 billion rand market cap, when you're putting another 6.5 on top of that, it's a big bet.
It's actually a bit smaller than that. You know, if you take the 48 billion market cap and a 2.5 billion equity that's going to be issued, so it's only 5% of the current market cap of the portfolio that will be issued to the Tiber Group.
And we know here at CNBC Africa Tiber quite well. They are the landlords of this business. But what is their reputation like in the marketplace?
I mean, the portfolio that Growthpoint is buying is a good quality portfolio with prime offices in some of the prime suburbs in Johannesburg. So it is quite a quality portfolio that's coming onto the books of Growthpoint. The only thing that is interesting is some of those rents that they are buying their properties on seems a bit higher than market rent. But as I said, those properties are prime properties. For instance, they're within Sandton itself, and quite new properties as well.
Commercial centre of Africa. Started in, more than 50 years ago. The death of the founder, no doubt, had some influence in the fact that it did come on the market.
Yes, no, that's true. And it's fantastic that the current management team will stay on for 3 years as part of the deal to just take the fund forward into Growthpoint and make the integration easier.
Anton, it's Gugu here. Just how significant is this deal as well as the acquisition of Tiber on the books of Growthpoint?
As I said, the 6.6 billion transaction is only about 10-15% of Growthpoint's current SA portfolio. And remember, Growthpoint also owns around the 65-66% of Growthpoint Australia. So it's although it's a sizable deal and, you know, the largest that they've done, it is not a game-changer deal for Growthpoint.
We've been following the listing of the ADRs of Growthpoint on the American stock market. Clearly, the bigger you are, the more those type of investors would like you. Do you think that's going to influence the investors at all in the fact that they're now going to be a little bit bigger?
They will be a bit bigger, but if you look at the listing price of the units being issued for the transaction, it is at 27 Rand, which is higher than the current share price. So I doubt if the initial increase in market cap will cause for more liquidity. But Growthpoint is always seen as a bellwether for the sector due to its size and due to its liquidity. So I think the investment into Growthpoint is, from an ADR point of view, is much more an investment into SA property as such.
That's quite a premium on the current market price, 27 Rand, that the share is going to be issued at, 24.50 at the moment. Yes. Just explain to us how that is possible.
As I understand it, and I'm talking under correction because I haven't spoken to management yet, is that the deal has been negotiated for past few months already. And if you remember correctly, since May, listed property has had a bit of a sell-off. So they probably started negotiating prior to sell-off of the sector and negotiated on the price at that stage.
There's quite a lot of stock that is going to be given to the people who own Tiber at the moment. Do you have any visibility into who those shareholders are?
And unfortunately not. I assume it's part management and part the family.
But from an investment perspective, would there be some kind of an overhang then in the share for a period of time until those holders of Tiber release themselves of their stocks?
I doubt it, because the stock being issued, as I said, is only 5% of the shares in issue, and Growthpoint being such a liquid share, it shouldn't really make a difference in terms of an overhang.
Anton, from your perspective, when Growthpoint did have a rights issue earlier this year, were you aware that the money being raised would be used to acquire a company in particular or specifically Tiber?
I think Growthpoint has been quite open over the last few months that they are looking at larger portfolios, and the market speculation has been out there that it may be the Tiber portfolio. As we all know, Growthpoint also looked at the assets of Fountainhead, so the likelihood of that also could have happened, and there are potentially one or two other portfolios still out there to be acquired. So I think it's not coming to the market as a surprise, not at all.
So they've shot all their bullets, though, from the current structures. Is it possible that they might still go for Fountainhead, or do you think this one is going to take a while to digest?
No, I don't think that they'll probably go for Fountainhead at this stage. Redefine currently has more than 60% of the shareholding. If you look at the current offer that they've got on the table to take some further Fountainhead shares from shareholders. So Redefine is quite entrenched there now, and the likelihood of Growthpoint going after that is close to zero.
So the Fountainhead fight is over?
Yes, I would say that, yes.
That was Anton de Goede from Coronation Asset Management.